Hi there, and thanks for that. Hi, I'm Martin Wardle from Robson Laidler. I'm here today to talk about how you can recover out of the strange situation we've been in. So, if you're in business, there's a good chance that you did one thing or the other. In our client bank of the businesses that have ceased, most decided to go rather than have actually failed. That's just anecdotal evidence from our client base. It's not any based on any fact or anything. Um, some businesses are completely unaffected by lockdown and COVID and basically continue to trade completely as normal. But it's also fair to say that some have barely struggled to survive, whereas some have actually thrived. And that's the interesting part about this. Many survived only because of the dozens of forms of support that were basically given out by the government. The main ones being furlough, the business rates grants, and of course things like the self-employed income support scheme. You then had CBILS and bounce back loans, which of course were loans. Um, and the pattern of which have thrived or barely survived isn't as obvious as you would think. For instance, we've got a restaurant client who was only a year into trading when they were forced to completely lock down. And within 4 days, they'd developed a takeaway service that they'd never done before, had never trialed, and were actually managing to sell basically every single meal that they could make. They've absolutely thrived and have since opened two new locations during the last 18 months. So pretty good. So what now? Well, outside of the obvious examples of, say, travel and some leisure, most businesses should largely be back to operating without any real restrictions. So you'd be forgiven for thinking all is well. The problem is the economy bears little resemblance to what it did at the start of 2020. Employees are wanting to work from home more or forever. We've got a public that has changed its spending habits. Staycations are now a common thing with some outrageous prices for holiday lets, less people traveling, and a host of other things have all caused changes to businesses. Many of these changes might have happened anyway. There was already a move towards some of these things, but the changes have been accelerated. And as a result of that, some businesses have really struggled to keep up. And in this regard, being a big fish in a small pond really didn't help because the big fishes just weren't agile enough. So what you've actually got is the little fish, the small agile business has really been the one that's adapted to make the most advantage of this. So what are the issues? Well, if you've thrived, then great. Keep watching if you want to thrive at higher levels. But if you barely survived, what challenges are you facing now? The problem is that lockdowns exposed the fact that too many businesses were actually asleep at the wheel. Business owners were in zombie mode. Things were ticking along okay. They got a decent income out of their business, and that was all they ever hoped for. Many of these businesses had barely changed for years, so when the real challenge came along, they were completely unprepared. Many of them made the mistake of thinking that life would go back to usual as soon as the initial short lockdown ended, but that ended up lasting much longer than most thought. Smart business owners, however, used the first lockdown to completely review how they operated. They reviewed their systems, their processes got tighter, their budgets and targets were set, and they had clear plans of how to achieve them. And they also drew up contingency plans in case lockdown went on longer than we first thought. Pivoting became the word of the day. And among those business owners, that was exactly what they did. Our client that opened two new restaurants did so after the first site was completely closed. And within days, they had a delivery service in place. And like I say, they were basically selling out as much food as they could prepare every day. How many others, though, just sat and waited? They got the business rate grant and they thought, well, we've got that. And then it went, and they didn't have another plan. Too many, unfortunately. So I'm not here to talk to you about your sector and the challenges you face in that sector, but of course, there will be some. If you're in an industry that's fundamentally changed, then you need to find a way to adapt to survive in your new industry. What else is out there waiting to bite you, though? Unfortunately, some businesses will have already taken actions that will already have serious consequences to their continued survival. Others again will have to close the door and will have done so on the very incorrect belief that they've cut their losses and don't need to worry anymore. They might have started new businesses, they might have started practically the same business but tried to walk away from their debts and commitments, or they might have just taken jobs. But it doesn't matter, there are a lot of hidden dangers out there which are about to bite a lot of people. So most grants had no strings at all, as long as you qualified. Business rates grants went out at different levels to businesses based on what they did. But how many businesses said that they were retail when they weren't quite? Um, there's no clawback on a properly claimed grant where the business failed anyway. But what if, as a director, you claimed something incorrectly from the outset and then used that money which you shouldn't have had? I know some trades, for instance, that had an office but claimed the retail grant on the basis that, well, customers sometimes come in. That's not really what was meant by retail here. It was meant as somewhere where you had to then turn away customers. If you're a roofer and you had a little office in the back of some unit somewhere where people occasionally drop by, that wasn't really a retail space, and you shouldn't have claimed the uplifted retail grants for that space. Other things like the self-employed got self-employed income support scheme. This was basically a replacement of income. The first thing that this exposed, which was quite interesting, is that a lot of people complained about the size of the support, but as it was directly linked to their recorded and reported income in previous years, it actually just exposed the fact that they hadn't been declaring enough income to survive. There was some irony in that. But what a lot of people don't realise is that HMRC are probably going to be quite quickly asking for some of this money back. And the reason for that is a lot of these were based on they were paid on the basis that you were going to continue to trade, that you were expected to trade. But a lot of people actually just took the money, sat for a couple of months, took a job elsewhere, and then ceased. The problem is HMRC are going to find out pretty quickly when you submit your tax return and show a cessation date, and they will then ask for that money. So HMRC have literally built into the 2021 tax return a box to say, are you going to give us some money back that you shouldn't have claimed? That's my words, not theirs, but that's what it does. Take that opportunity, if this is you, use that amnesty, for want of a better word, to repay these things voluntarily. Because if you don't, they've already set teams up to go around and get these monies back. Perhaps one of the most abused support scheme offerings from the government is the bounce back loan scheme. So this was basically a self-certify loan that loosely gave businesses up to 25% of turnover. It was to be used to prop up the business so long as the business was viable before lockdowns began. And I've already gave you some of the headline reasons there that people could get into trouble here. But the basic reporting on this at the time was that there were no personal guarantees required. The banks didn't have to take the risk. The government would support the risk. And the directors could take these loans safe in the knowledge that their personal assets were not at risk. Banks paid money out within hours once they got the systems up and running a couple of weeks into the scheme. And all of a sudden, the economy was awash with money. For those businesses that complied with the rules, their only battle is to be able to afford the repayments that they've now started to make. But as we know, hot tub sales went through the roof. They were literally selling thousands of hot tubs a day at some points. So it's just the big question is here, how much of this bounce back loan money was used to buy things like hot tubs, which is not really what it was meant to do. Let's assume though that you claimed properly, used the money properly, but you're now struggling to meet the repayments on the bounce back loan. There are some things you can consider. So whilst the term of the bounce back loan is actually, the terms are pretty good, you might find it better if you basically get a proper business plan together, find out what you need to do to get business back on track, and then approach a bank or a lender to try and refinance. The recovery loan scheme in particular might be a good thing to look at here. And the banks are pretty desperate to get this money out, to be honest. From my conversations with them, they'll find any way they can to get this money in your hands. So take advantage of that, but make sure you're doing it with a proper plan, because you should build in what the repayments are going to look like. Don't forget, of course, as well, that directors can inject money into companies from their own resources. So personal lending rates, particularly mortgages, for instance, are pretty good at the moment, and that might be an easier option to raise money and then inject into the business if you need to. Others with an overdrawn loan account might have no option but to do something like that, and I'll come on to that soon. So if you raise the money personally to allow the company to reduce the debt that it has, or you might say, well, actually, I'll raise the money so I can then stop taking money out of the business. Either way, you'll take pressure off the day-to-day finances of the company, which can only help you be in a stronger position going forward. But obviously think very carefully before you take on additional debts, and make sure you're doing so with a clear plan, a clear vision of what you're going to do. So, although the grants and the bounce back loans are at no risk to any business that failed, despite their best efforts, it is worth bearing in mind that many directors will have statutory obligations that they shouldn't forget here. So, if you were struggling before lockdown and took a bounce back loan anyway, then any insolvency practitioner that ends up winding up the company will have to deal with this. And if you as a director owe the company any money, they will still have to collect that money from you. The same goes for grants and furlough, claims that were made incorrectly. What I mean by that is an IP or an insolvency practitioner on a wind up is forced to ensure that the public are not out of pocket. And if they do not chase up any monies that should or could be collected, they can be personally liable for it. So the fact that there isn't any personal guarantee on something like a bounce back loan, or that the grants were given without any clawback where correctly claimed, doesn't mean that you can't still have a risk of losing your personal assets here if you've behaved improperly, negligently, or fraudulently. If you owe the company any money when it fails, then your personal assets are at risk. This is before we even consider the fallout from the 20,000 or so plus furlough reports that have been made to HMRC for things, or from people like disgruntled employees or disgruntled competitors who knew that employers were claiming furlough, but then making their employees work anyway, in a direct breach of the rules of the scheme. The most egregious abuses of this are businesses that basically then just continued working, took cash, didn't put any money through the business, pretended everyone was at home, and basically claimed furlough. Of course, that's a blatant misuse of the scheme, and HMRC already have, like I say, I'm pretty sure at last check it was over 20,000 reports of businesses that have done exactly that. Those directors of those companies are definitely going to have to lose personal assets, because that is not money that's been lost despite your best efforts. That's a blatant abuse, if not a criminal offence. Let's assume people haven't done anything illegal, and let's just assume that they've just made some basic errors. So one thing that a lot of businesses have no idea of the difference between is cash and profit. They believe that if there is money in the bank, then it can be used for any purpose. As a majority of company owners pay dividends, they will probably have used the bounce back loan to allow their monthly draw to continue. The problem is that dividends can only be paid after all other expenses are met out of income. So that sounds easy, but here's an example where so many people have fallen into a very simple trap. Let's assume in a normal year pre-lockdown, a business made 50k after it paid all of its expenses. The turnover might have been £1,050,000, and they might have £1,000,000 worth of expenses. But let's just say they've made 50k of taxable profit. 10k or so of that would have gone on corporation tax, leaving £40,000 available to be distributed to shareholders. Let's say that director took £3,000 a month, 36 grand, most of the money, and at the end of each year there was a couple of grand left in the pot. Let's assume though that that business was one that had no income at all during lockdown. And let's just assume for simplicity it didn't have any grants. They did, however, take a 50 grand bounce back loan. Now they thought, we've got cash in the bank, we're okay, we can still keep taking dividends. After all, what else were they going to do? Seems reasonable. But let's just say that's a business that's still struggling. What they've actually done is they've basically put themselves in a position where the dividends they took are illegal dividends. They're illegal in that there were no legally distributable profits or reserves that the business could use to pay dividends. Now, again, an insolvency practitioner will almost immediately ask for that money back if that company is to fail. What if they then say, well, we're going to crack on, we're going to find a way to repay that money? Well, that's where you might need to then look into your personal finances to find ways to repay that money. But rest assured, if you've now run out of cash and you haven't started operating as normal, regardless of the reason, you might still be in one of the few sectors still caught, or you might have lost your trade because you sat still, whereas your competitors pivoted and developed. They've nibbled away at your customer base, or they've simply moved into a new area because your area of business doesn't exist anymore. It doesn't matter. But you still need to find that money to repay because, like I say, it's an illegal dividend. There's no PG, no personal guarantee on the bounce back loan, but you owe the company the money. It doesn't matter whether the company can repay the loan to the bank. It's you personally that will owe the money back to the company. And an insolvency practitioner will make sure they get that. If trading is back, you've still got an issue that you still had a year where you paid dividends out of money that was cash, not profit. You've still got to find a way to repay that. If your business goes back to what it used to be, makes 50 grand this year, 40 grand distributable, you can't really take that because you've already had it. So you've got to find a way to either double the amount of money you make in a year or take less to repay the money you've had. If you don't repay it and fail, insolvency practitioner, if you keep going, you will actually have a tax bill. A lot of people don't realise if you've got an overdrawn loan account, which is what you will have, in most cases, the shareholders or directors, you'll have an overdrawn loan account, and that means you'll have a corporation tax bill, even though you didn't make any income. A lot of people aren't expecting that, and it will probably come as a pretty big shock when all of a sudden you've got to find, a decent amount of money, almost a third of the illegal dividend has to be found and paid across by the company from money that it simply doesn't have. So, whatever your position is, let's assume you want to continue to trade and you really need to think about what you're doing. Some of these things will help you even if you've thrived and you want to thrive even more. Like I say, you might have barely survived and want the next 18 months to be better than the last 18 months. Or maybe you were just about to close the company, but now realize that you can't because if you do, you're going to have to repay these loans anyway, and it's not going to be as easy as you thought. If you've already closed a company, you probably need to start planning and speaking to your insolvency practitioner about how you're going to get this money back in when they ask for it. But what are we going to do? It's criminal that so many businesses fail simply because they don't keep a good handle on the money they are owed in or the money that is owed out. If you're struggling to pay your bills, speak to your creditors and see if there's any chance you can extend payment terms, renegotiate any finance deals, any HP, renegotiate loans, recovery loan scheme, that type of thing, like I say. Don't simply ignore them as you'll end up with a CCJ and that'll really make it hard to get any new finance deals agreed or even to get new suppliers when the old suppliers cut you off. If it's HMRC you owe money to, get onto them and agree a time to pay. The problem is you have to be able to demonstrate that you can afford to continue to trade and repay the loans. Don't forget, if people owe you money, you should be asking for it. It's not impolite to ask someone to pay a bill for a service or goods that they've had. It's not rude to ask for your own money. If you're asking for the money and you're still not getting it, ask Alison and our team at Sintons and they will write you a letter which will, in most occasions, jog the person enough just to get them to pay you the money. We've had clients who've waited months, if not years, for money, only to get a letter from someone like Alison and her team for a nominal sum, and all of a sudden the money comes in within a week or two. And yet people have waited months, if not years, to get that money, like I say. So get the right people involved to get the chaser done before it's too late. Like I say, it's criminal if your business fails simply because you haven't been paid for work that you've genuinely done. Even better, let's try to avoid things getting that far in the first place. Make sure your accounts package has an automated chaser system built into it. Most of the online accounts packages now have very rudimentary chaser systems built in. Very straightforward. Just make sure they're turned on. There's normally literally a button to turn on automatic chasers. Of course, be sure to keep your records up to date then. The last thing you want to do is chase someone who's already paid you and upset them. But equally, make sure you get your invoices done as soon as the work is finished. And if you want something a bit more sophisticated, there's some great packages out there. Things like Chaser will link to your accounts packages and give you very sophisticated automated chasing systems. Remember to review your debtors regularly, and of course stop working for people that don't pay you. Too many people just say, well, they're having a tough time, but they will pay me. Are you sure? If you've got two jobs in front of you, focus on the one that's going to pay you or has got a better payment history. Goes without saying to try and do profitable work, but sometimes you've got to do the work in front of you. Take deposits where you can, but don't forget, a deposit taken on a job shouldn't be used to finish off a previous job, the classic builder's mistake. Make sure the money you get in on a job is put into delivering the service that you've sold or the product that you've sold. This isn't a rob Peter to pay Paul scheme. Pardon me. Make sure your basic terms and conditions are included on all quotes and all invoices for all works. Sounds simple, but too many people don't have a basic understanding of the work or service that they're meant to deliver, by when, and clearly set out the payment terms. Again, there's no excuse these days not to have an account system that includes all of those things by standard on every invoice you send out. It's nice and simple. One of the things Alison and her team will tell you is if they get asked to chase a debt, you have to be able to prove the debt. You have to be able to demonstrate the work was done and how much was agreed and when you invoiced for it. If you haven't got those things, you're really going to struggle. And if you can't prove that a debt is late, how can you chase it? Consider offering more ways to pay. Taking card payments is a simple way to get people to pay quicker sometimes. This sounds ruthless, but people will often pay you if you'll allow them to pay on a credit card. Check to make sure that you're not just going to lose too much of a cut on that. Be careful about recharging. You can't recharge personal card charges as of about 2-3 years ago now, but you can charge business cards for payments via business cards. But even if you lose a couple of percent on getting the money in, getting 98% of your money now is better than getting 100% of your money never. So payment terms are helpful. Also, look at things like iWalker Pay, IWOCA, iWalker Pay. They will often give your customers, your clients credit, meaning that you can get paid on day one. And there's many other options out there as well, including things like invoice financing through banks, etc. Although quite often once you get into those schemes, they're quite hard to get out of. So what if you didn't pivot and your business is struggling? Like I say, your competitors have nibbled away and you haven't actually seen a return to pre-lockdown trading changes. You haven't seen a return to pre-lockdown trading norms. The chances are they're not going to now. If you're not in the travel or leisure sectors, then if your business hasn't returned, it might not be going to. Now is the time. The best time to start planning was yesterday. The second best time to start planning is now. Get into action and get on with it and see if there's some basic things you can get on with. On an even more basic level, carry out a thorough review of your business and personal outgoings. Make sure you actually need to be paying everything that you are. How many subscriptions are buried away in your direct debits for that little quirky bit of software that was really awesome, but you never quite got around to using it? Turn the damn thing off, cancel the direct debit and save some money. What about premium versions or upgraded versions of things that you're using that you just don't use the additional benefits? Reduce things down to the bare minimums. And of course, you know, even more fundamental things like if you're a business that has an insurance that you pay based on the level of activity, reduce the business activity, get cheaper insurance premiums. If you used to do three different things and one of them was high risk and you don't do it anymore, take it off your insurance. Speak to your broker. Good brokers have been doing this automatically, but shy bairns get nothing, as they say in the Northeast. Reach out, ask if there's any way you can reduce those costs. The other classic, of course, is space. Do you need as much space as you used to? If your team aren't working from the office anymore, are they ever coming back? If they're not coming back and you're happy with that and everything's just as productive, do you need the space? Should you give it up? If you're stuck with it, should you think about using it differently? Could you sublet it or something like that? Lots of options out there. Slightly harder to get to grips with, of course, is measuring productivity. Many have struggled to adapt to new shift patterns and working styles, but others have realised that they can actually output more with less manpower. We've had clients who had to furlough staff because of social distancing requirements in their business, but actually yet still managed to increase sales and profits. They had some difficult decisions to make once once the social distancing measures came back. They had to bring people back in, but yet didn't need them. Do you measure key stats in your business? Do you even know what the key stats are that you should be measuring? If not, then get started. Turn Netflix off this weekend and spend some time planning the future of your business. A business without a plan is far less likely to succeed. A plan that's not written down is just an idea. And progress towards a plan that isn't measured is a wasted opportunity. Measure your actions, see if you're getting closer to your actual vision. And if you don't know what I meant by the difference between cash and profit, then you need to find out. If you don't know where to begin, reach out and we can give you a hand. I hope you found that useful. But meanwhile, thank you very much to Sentence for asking me to speak today, and I'll pass you on to the next speaker now.